Hey, good morning, everybody. I know that we still have some folks entering the Zoom webinar room, but we have a real powerhouse of a seminar here today, so I want to get started. For those who don't know me, my name is Michelle. I'm the Executive Director of the Financial Management Association. I am very pleased to introduce our seminar today. FMA, of course, is pleased to partner with the Finance, Economics, and Banking Research Network to host these series of virtual seminars featuring researchers at the forefront of their fields. Today, we have Reena Aggarwal of Georgetown University, a prolific author, as well as a very good friend of the association, and her two amazing co-authors, Laura Starks and Hoa Brisco-Tran. With that, I'm going to go ahead and pass it over to my colleague, Cesario. Cesario?
Thank you very much, Michelle, and a warm welcome to everyone. I have a pleasure to introduce as well today our moderator, Valerio Poti. Valerio Poti is Professor of Finance at University College Dublin, Ireland, and the University College Dublin has been a partner of FEBRN for a long time. So I pass it to you now, Valerio, and you move from here.
Thank you. Many thanks, Cesare, for the nice introduction. And I have the honor of introducing Professor Aggarwal. Professor Aggarwal is Reena Aggarwal, and she's the Robert McDonough Professor of Finance and Director of the Georgetown Psaros Center for Financial Markets and Policy. But most importantly, she's an amazingly prolific scholar. She has a rich and diverse set of contributions to the field of finance, with a particular focus on global financial markets, market regulation, IPO, capital raising, ETFs, corporate governance. I think one big aspect of our research is corporate governance, executive compensation, the role of institutional investors, and more recently, fintech, digital assets, central bank digital currencies. What's amazing, what I find amazing in a profile is not only the caliber of her contribution to the field, with her scientific articles which have been published in the really top finance journals, Journal of Finance, Journal of Financial Studies, Journal of Financial Economics. But I find intriguing the depth of her engagement as an academic leader in an institution, and the depth of her and the extent of her policy engagement. She's been consulting she's been advising several bodies, including exchange commissions, and I think it's a distinguishing feature of her work. So without any further ado, I'd like to introduce her and pass the stage to her. Thanking her for taking the time to contribute to this wonderful seminar series that is we put together in our network, but under the leadership of Cesario, who is doing a really amazing work with the help of everybody, I suppose. But Cesario is really taking the lead and doing an amazing work. Thank you very much.
Thank you, Valerio and Cesario and Michelle. Thank you so much. I also want to thank you on behalf of FMA, Cesario, for your leadership. Being an officer of FMA, it makes me really proud in terms of what you've achieved with this seminar series. So on behalf of FMA also, I want to thank you and echo Michelle's sentiments that we are delighted with this series and how it's gone on for such a long period and the impact that you've had. So thank you. And I also want to recognize my fantastic co-authors who have joined this morning. Hoa Brisco-Tran is at University of Alberta, and this group knows Laura Starks very well. And our third co-author, Ishel, is teaching right now, so Ishel is not able to join us. With that, I will go ahead and try to share my screen. And let's see, does that work all right?
That's perfect.
Okay, so but yeah, we're really excited about this project, and I think we're bringing two kind of really nice innovations to the work that has been done in the area of corporate governance. So we are trying to see what is the impact of public sentiment. And public sentiment has become such a big thing these days, right? Especially with social media. It's not just about governance, but in all kinds of ways, how public sentiment can have a huge impact on a whole lot of issues. And so we wanted to look at public sentiment with regard to how shareholders react, really the large institutional investors, how they react to public sentiment. And this is not a new thing. The media has covered public sentiment in the past. This is going all the way back to 1930, where executive compensation was being questioned. Is it too high? And so this is not a new thing, but we do live in a new world. Now we have social media and we have the traditional media. And it's not just about compensation, as everyone is aware. Public sentiment about product and human capital issues, employee, are they taken care of not? And so there's so many issues that public sentiment can captures, and that's a little bit of what we are going to be looking at. And as mentioned here, there are so many social media users now, and things can get disseminated very quickly, very fast, and 5 billion social media users by 2023. So big numbers here. So what are we trying to do in this paper? We're trying to see how public opinion can impact firms and how it impacts boards specifically. What do shareholders care about public opinion? So think of a large institutional investor like a BlackRock or a Fidelity or whoever else, right? And they have clients, they have lots of different products, and people are investing in these products. So does a BlackRock consider what their final clients might be saying, what they might be interested in? And so do they monitor public opinion in any form or shape? That's one thing we are looking at, this public opinion. And then what actions do they take based on that public opinion? Is that public opinion influencing them in terms of what actions that they might take as a shareholder in a company? So one might argue, yeah, they care about public sentiment, they care about public opinion, and they do their own research. They combine the two, and then they decide whether they're engaging with a company or how they're voting. They decide what to do. Another argument might be, no, they're just focusing on their analysis, the financials they look at, their non-financial beliefs, and based on that, they take whatever action they take as a large shareholder at these companies. So we're going to try and answer, is it the yes answer or is it the no answer? What do we find here? We have, I think, two really cool kind of innovations here. One is how we measure public sentiment, right? So public sentiment with our database, it could be measured on many different dimensions. We focus on sort of three issues here. So one is financial issues. So, anything related to valuation and what analysts would be looking at. Then we're also looking at environmental and social issues and also governance issues. So I think our measure of public sentiment, how we are proxying for public sentiment, I'll talk about it in a minute. That's pretty unique, and how we get our proxies for public sentiment. The second one is how we measure shareholder dissent. So what actions can shareholders take? How do we measure that shareholder dissent? And just to give it away, we are saying that we should look at the number of shareholder proposals, right? So nobody in the literature has ever used this. So we are saying that in addition to what we've used in the literature in the past, we should look at number of shareholder proposals, and I'll explain in a minute why we think this is one good way of measuring dissent. So let me start with the sentiment part of it. And we look at, so what we are finding is basically if there's negative sentiment, if public opinion is negative, I'll go into the details of how we capture sentiment, but if it's negative sentiment, then there are more shareholder proposals, right? There's more dissent basically, and so shareholders are proposing more shareholder-sponsored proposals. As you know, there are management-sponsored proposals and there are shareholder-sponsored proposals. And almost always, management opposes shareholder proposals, right? So in very rare cases, they might not, but most of the time management opposes shareholder proposals. But these shareholder proposals give a sense of what are shareholders concerned about. They're submitted both by individual investors, they're submitted by institutional investors, they could be submitted by either group. So what we're finding is, yeah, the sentiment, it drives more proposals. If it's negative sentiment, and both on the financial aspect, that's important, and also the ESG sentiment, it drives more proposals. So after looking at financial and ESG sentiment broadly, then we look at, we split up the ESG sentiment into E and S we combine together, because otherwise we're not going to have enough number of observations if we separate it out too much. So first we start by putting E and S together and G separately. And the other cool thing about our proxy for sentiment is we have sentiment coming from social media, but we also have sentiment from what I'd call traditional news, right? That we are used to thinking. If you're thinking of a Wall Street Journal or a Financial Times, that's sort of traditional news. And then social media is everything from LinkedIn and Reddit and Twitter and those kinds of things. So we can look at what are the differences between, does social media have more impact, or does traditional news have more impact? And we find both have an impact, but the traditional news sentiment, that captures more in terms of, that results in more shareholder proposals, right? So does sentiment matter? Fine, there are more shareholder proposals, but then these shareholder proposals, the number of shareholder proposals, we show the real consequences. There's higher director turnover, and there is more CEO turnover. So we show sort of the real impact at the firm level, and it's pretty significant from an economic point of view. Director turnover in general, we know is not huge, but we show if there are more shareholder proposals, there is more director turnover, and it's quite significant. And the same thing with the CEO turnover, and especially for CEO turnover. So if shareholders are dissatisfied in the way that we are capturing it, there are real consequences for the leadership at the firm, both in the CEO level and the director level. Okay. And then, of course, one might argue about endogeneity issues and be concerned about that. So we use sort of a very unique setup to come up with an instrument based on scandal movies, and whether that is associated with certain firms. And we use that as an instrument to see whether our results still hold or not. And we find that our results continue to hold. And I'll go into the details of that. Okay. Just moving ahead here, why should firms care about public sentiment? For a number of reasons. We've seen a target gets attacked by public sentiment, and suddenly people are boycotting products from Target, or this can happen with other companies. It might impact their financial performance. The regulatory authorities might, we've seen this many times, it brings attention to regulators, and regulators will start looking at, okay, what's going on here? And they may come up with new regulations that might impact the firm negatively. So the point is that public sentiment can have an impact at many different levels, and then there'll be real consequences for the firm and the directors. So the firm should pay attention to it. but we are saying also investors pay attention, might be paying attention to this public sentiment, and it impacts how they engage with the firm. Please, by the way, feel free to submit questions, and happy to take questions at the end of the talk here. Okay. Okay, so yeah, so do institutional investors care about public opinion? And Michelle Atkins is a managing director at BlackRock, and she manages a big part of the investment stewardship team. And Michelle will say that yeah, sure, we follow media coverage. It helps us to keep in touch with a broad range of constituents on corporate governance issues. Obviously, they're doing their own research. They're looking at the work that proxy advisors have done. And but in addition, they're paying some attention to media coverage also. So just an example of, yeah, she said, certainly we are looking at media coverage to see, are we consistent with what the market is thinking, what their constituents are thinking? What about other large investors? They want to know what's going on, and in the end, they decide how they're going to engage with companies and what actions they might take. So, I think public opinion does matter. Okay? And so then the question is, well, companies like BlackRock, asset managers like BlackRock, do they take actions based on this public opinion? Obviously, we can't separate out whether they do or they don't, because it's the whole, it's all the information that they're making use of, but they definitely seem to be paying attention to public opinion also. Okay. Okay, so going back to our two major innovations, one is the sentiment measure that we're using, and this comes from something called LSEG Market Psych Analytics. Let me just explain. LSEG is the London Stock Exchange Group, and you know, we think of it as the London Stock Exchange group. The stock exchange itself is a very small part of their business. They have invested a lot in different kinds of data. They bought Refinitiv, and Market Psych was a firm. So Laura and I, we serve on the academic advisory board of LSEG's FTSE Russell. We've done that for many years, and we used to meet the head of this market psych unit there. And it was fascinating to know the kind of data that they were analyzing and what they were doing with the data. And those conversations led us to think about we should be using this data to really see whether the sentiment that they're capturing, whether it matters or not. And that's part of the ways one of these this project came along. So there, it's really massive data, and thanks to my co-authors here who put in a lot of work to make this data useful. So they cover more than 1,000 financial social media sites. They cover more than 2,000 business news. They do their own research. They put out sort of what I'd call white papers. Obviously, not the kind of work that we do in academia. And in addition, it's interesting, they have very specific ESG kinds of sources, and they focus on ESG also, both on the news side and the social media side. So, so this is really interesting data. That's what we use for capturing sentiment. Okay? So they're identifying lots of subcomponents of ESG. They're looking at things like carbon emission, workplace sentiment, and they look at controversies related to ESG. And that's what's going into the data. And they're using machine learning, as you might expect, to capture all this information. And then they're coming up with these scores on different subcategories, and then the whole comprehensive aggregate category. So just to give an example of what exactly they're doing. So they basically let's say Apple, there are three pieces of news about Apple, right? One is positive, one is negative, and then the third one is also positive. So there are three pieces of news about Apple. And so there's something called the buzz. So the buzz for Apple would be three, right? And the sentiment will end up being, it's weighted by buzz. And so one is positive news, the second one is negative, the third one is positive, and Apple's emission sentiment would be a 0.3. right? And it's weighted by the buzz, right? So some companies will have a huge buzz, right? The Apples of the world, they'll have tons and tons of news. And then some smaller companies will have a much smaller buzz. They're not covered in social media or in traditional media, they're not covered so much. So this is how basically they do it. And the nice thing is that it includes the social media in addition to the traditional media. So when I say news, that's traditional media news, and then there's social media news, and we'll try to separate out the differences between the two. They'll do industry specific weights for the comprehensive aggregate ESG sentiment. And as I'll show, what we end up using is we're using these subcomponents that are weighted by the subcomponent buzz for each company. And so the range of the sentiment score is going to be between -1 and +1. And that scaling makes it quite nice. And they are doing this literally by the second, and not just daily or monthly. And we aggregate the daily to bring it up to a monthly level. Okay. So then the other innovation in the paper is how do you capture shareholder dissent? And certainly in the literature we've looked at voting outcome. What percentage of votes were supporting a proposal or not supporting a proposal? And I've used that in my previous papers. So that's certainly one measure of the shareholder dissent. But we are saying, you really should look at the number of shareholder proposals. And one reason is most firms do not have a shareholder proposal, right? That's very important information. And by looking at just the voting outcome on shareholder proposals, we deleted that whole group of firms that doesn't have a shareholder proposal. But that's such important information. If those firms don't have a shareholder proposal, that should suggest that shareholders are not that concerned about those firms. But if we just look at the outcome of shareholder proposal voting, we are leaving out all that good information in a sense. And so I think it's really important that we look at the number of shareholder proposals. It may be in addition to voting outcome on shareholder proposals, but I think this is sort of a nice innovation that we have. And we really came down to this because we said when we look at the outcome of shareholder proposals, the voting outcome, then we're just leaving out so much good data about companies where shareholders don't have dissent. And that led us to think about we should include this information. Okay, so this way we are able to keep all the firms in the sample, and the firms that don't have a shareholder proposal, there's some very important information there. Okay, so here's an example of Amazon. In 2022, Amazon had 15 shareholder proposals. Right? In 23, Amazon had 18 proposals. 24, they had 14 proposals, right? And they cover lots of different issues. It could be compensation, climate, diversity, lots of issues. I think this is really important information that shareholders are concerned about a breadth of issues at Amazon versus a company that might have only one shareholder proposal or a company that has 0 shareholder proposals. So this is what we are trying to capture. So when I say number of shareholder proposals, in 22, we would have that number would be 15 for Amazon, 15 shareholder-sponsored proposals for Amazon. Okay, the number varies a lot, all the way from 0 to, as you can see, in some cases, it's just many, many proposals coming, a variety of issues. Yeah. And then we will, as I mentioned, we'll show that the number of shareholder proposals, it predicts real consequences for directors and CEOs. There's more director turnover related to if a company has 15 and 18 and 14 proposals, there's going to be more likely to be director turnover. There's more likely to be CEO turnover and forced CEO turnover. So we think this is a more comprehensive measure of looking at shareholder dissent, shareholder concerns, than just voting outcome. And there's another point that many proposals are withdrawn due to negotiations with management, right? So you might have, you might be putting in a shareholder proposal, but in the end, it doesn't get voted on because it gets withdrawn. Okay, so we capture this information also. So ultimately, it doesn't get voted on. So if you're just looking at shareholder voting outcome, you're not going to capture that because there have been negotiations and the proposal has been withdrawn. So certainly shareholder proposals, they fail. It's been shown in the literature. They don't get majority support, and most of these are anyway advisory in nature. But the reason for putting in shareholder proposals is also to raise awareness and still have an impact, even if they don't get 50% voting outcome. So in another study I'm working at, looking at, we find that as soon as there's one shareholder proposal, even one, as long as there's any shareholder proposal on the ballot, the voting outcome are such that there's more voting against directors at that firm, right? So even if it might not be that the shareholder proposal is passing, but directors get dinged as soon as there's any shareholder proposal on the ballot. That was sort of another motivation for us thinking about, well, the shareholder proposals are important. We should look at it in a different way than maybe we have in the past. So the other thing we look at is also, we will look at voting against directors. That's another way shareholders hold the board responsible. So just in general, sentiment has increased over time. So this is positive. Sentiment related to the environment tends to be the highest. Sure, we read lots of news about environmental issues, but they're really concentrated in a few firms. For most firms, it's not an issue. So on average, E-sentiment has been increasing, and E is the highest, then it's social issues, and then it's governance issues. You might question why E dipped in 2017-18 because proxy access proposals were fewer because companies had already addressed this issue. So the sentiment, it varies a lot based on industry. As one might expect, oil and gas firms, they have lower environmental sentiment, but banks are high on E sentiment, but banks are lower on governance sentiment. So there's a lot of variation across industries, and therefore we do control for industries. They also vary a lot based on the company, right? So you'll have an Exxon. Exxon has a major event, and sentiment will become sharply negative for Exxon on the E sentiment. You have a Wells Fargo. Wells Fargo is in the news a lot. There are lots of problems of Wells Fargo, and they have the scandals that come out about Wells Fargo. And the G sentiment, it goes down dramatically for Wells Fargo. There's Tesla. So Tesla tends to be high on E, but G and S for Tesla, you can see that they've declined in recent years. The point is that industry matters. The point is that depending on the company, It might be the E, it might be the S, it might be the G, it might be a combination that gets dinged based on what's going on. So the sentiment is varying over time, and especially when there's some kinds of scandals, and that's what we are trying to capture here. This is, as we know from the literature, shareholder proposals, they get about 36% support, while management-sponsored proposals, they get a lot more support, more than 90%. We know this from the literature. And even though the shareholder-sponsored proposals get low support, they don't have to get 50% support to have an impact. In one of my other papers in the past, we've shown that basically once you start getting about 15% negative votes, there are negative consequences, right? So it doesn't have to meet a threshold of 50%. As soon as you start getting about 15%, there are real consequences, and proxy advisors will say, hey, if you're getting about 15%, you ought to be paying attention to that. Otherwise, we're going to vote recommending against you. Okay, let me keep going here. So over time, shareholder proposals have changed, and just so that everybody knows, the shareholder proposals, the threshold is relatively low in terms of who can put in a shareholder proposal depending on the dollar amount invested and how long you've held the stock. So that threshold is pretty low. But there are some gray areas, and then the SEC comes in as the referee and says whether these proposals can be put in or these proposals can't be put in. And for example, in recent years, the SEC became very lenient about ESG proposals, especially the E and S proposals. And we saw that there were more ES proposals on the ballot because the SEC became a little bit more lenient about allowing them on the ballot. And it'll be interesting to see what happens in the next couple of years. I suspect that trend will reverse in the next couple of years. Okay? We don't see any real rise in shareholder proposals around social issues like Black Lives Matter or the Me Too movement. We don't see a huge rise over there. But over time, there's certainly variation in the number of shareholder proposals across firms here. Yeah, Exxon is a great example. As you know, Exxon was in the news a lot for a couple of years. They had 3 proposals at one point, and then there were 26 proposals. Over a 3-year period, they went from 3 proposals to 21 proposals. Okay, so this is what we are trying to do. Our measure of shareholder dissent is shareholder proposal count. So that's a sort of a left-hand side dependent variable. On the right-hand side, we have this measure of sentiment, which is, again, coming from LSEG, Market Psych. And then we have firm fixed effects, industry year fixed effects, and our standard errors are clustered. The regular form characteristics that have been used in the literature, we control for that. And so that's what we are running. We include everything that's in the ISS voting analytics data set that has been used in the literature. And we include firms that are above the yearly 25th percentile in terms of buzz. We don't want to include, in terms of sentiment, we don't want to include firms that basically don't have much going on in terms of the buzz, in terms of news, in terms of social media. If there's no activity, we leave those firms out. And typically, those are very small firms. Yeah. So the first set of results, again, the left-hand side, the dependent variable is number of shareholder proposals, shareholder proposal count. Okay? So as we can see, ESG sentiment, it's very significant. Whether we do industry year, whether we do firm year fixed effects, it's always significant. And financial sentiment is significant, right? So, but if people are talking about the stock, about earnings, any financial aspect, that is significant, and it results in more shareholder proposals. Okay. E, so S, as you can see here, S is significant. Social sentiment is significant. And this is kind of an interesting result because in some of my other work, I don't find the social, if you look at like ESG ratings, MSCI ESG ratings and ratings on S, that doesn't seem to be significantly related to voting outcome. But here what we're finding is social sentiment is related to shareholder proposal count. So, so people are paying attention to social sentiment. Governance is always significant. And so this is broadly the first set of results. And then and it's very economically significant. One standard deviation drop in ESG sentiment means there are 0.26 more shareholder proposals. And if you compare that with the average number of shareholder proposals, that's a pretty significant number. Okay, okay, then so now we look at, okay, we looked at all shareholder proposals. Now let's focus on E and S proposals, right? We sort of know governance as being significant in the literature in different ways. So if you just look at E and S proposals, well, what we're finding is E sentiment and S sentiment are important for E and S proposals. So if my company is in the news a lot or in social media a lot because of environmental issues, if Exxon is in the news a lot about environmental issues, or Tesla is in the news a lot about social issues, then Exxon and Tesla are going to have more E and S proposals. That's what we're finding, right? And it's kind of nice to see that we don't see that with governance, right? So because people are concerned about governance, they're not submitting E and S proposals. So, this sort of proves that. Right? Now we look at what is driving the number of shareholder proposals related to governance. So again, it's not the E and S this time, it's governance. If people are concerned about governance issues at Fox Corporation, or whatever company they might be concerned about, and they're concerned about governance, then they're submitting proposals that are related to governance. So this is kind of, it gives us reason to believe that this is all kind of making sense here. And financial sentiment always tends to be significant, and that's good. People are concerned about the financial health of the company. There are going to be more shareholder proposals and governance proposals. Okay, so now we split up between traditional media, the Wall Street Journals, the Financial Times of the world, versus at the bottom we have social media. And we're trying to see which one has a bigger impact, right? With the democratization of news, of information, and social media becoming so active, basically we're finding it's the traditional news media that is more important than the social media. But you can see that social media is still playing a role here, especially for social sentiment. Okay, but in general, it's the traditional media. Okay, so but I think for the first time, it's nice that we can separate the two out and see what is the impact of each one. Okay, and again, capturing that social sentiment, that's also a unique result that we find. Yeah. So do these number of shareholder proposals our new measure? Does this really have any consequences? As I said before, it does. There is more director turnover, there's more CEO turnover, and there's less support for directors. And this is all economically significant. So these number of shareholder, even though the shareholder proposals are not getting majority support, but the number of shareholder proposals, if people are concerned about a whole host of issues, from social issues to governance issues to environmental issues, if they're concerned about a whole host of issues, there are going to be consequences for directors, there are going to be consequences for CEOs. So it was interesting to see that a new measure of shareholder dissent, there are some real consequences here. So now it's whether we look very specifically at director elections and what happens when how public sentiment is related to director elections, and we very clearly see that if sentiment is low, if the public is concerned about companies, that there's going to be so this is based on voting outcome, actual voting outcome. This is not number of proposals, but this is based on director elections voting outcome. Lower sentiment on financial and governance issues, as you can see in this table, leads to you're going to vote against directors. Okay? So sentiment has an impact on voting outcome as far as it relates to director elections. It does not seem to have an impact, the first bullet point there, on shareholder voting outcome, shareholder proposal voting outcome. So as far as shareholder proposals are concerned, in terms of voting outcome, the metric that we've used in the past, we would not see results there. As I've shown before, but we do see results when we see number of shareholder proposals. And in terms of voting outcome, for director elections, yeah, there is a consequence on voting outcome for directors. Now coming to the endogeneity issue, so one might say that, yeah, this public sentiment that you're looking at and the number of shareholders that you're looking at, this might be jointly determined and they might be jointly influenced. And so you have an endogeneity problem. So we look at scandal movies as a shock, and so these scandal movies should not be impacting shareholder proposals, but it changes public sentiment about a firm. So we do this matching based on these movies and which firms would be affected by these movies. And I'll let you read the details in the paper, but basically, even after we do this this test here, and we still find that our results continue to hold. So we look at what happens after this scandal movie comes out that should be impacting public opinion about a firm. And we continue to find, after using this instrument, that sentiment still impacts the number of shareholder proposals. So this is one way we are addressing endogeneity kinds of concerns, and we find that our results basically continue to hold even after making for this adjustment here. And so, but right on time here, to conclude, I think we have two major contributions made to the very vast literature we have in this area. One is we are looking at sentiment as and we're using a very sort of unique measure of sentiment to show the sentiment drive shareholder actions. And we show, yes, sentiment does drive shareholder actions. It's financial sentiment, but it's also sentiment related to ES and G. So I think boards should be paying attention to our results in addition to our academic colleagues. Firms should be paying attention to our results, and institutional investors should be paying attention to our results, and the wider public, that their sentiment really does have an impact. So I think these results are important for a variety of reasons. And to conclude, our measure of shareholder action and the number of shareholder proposals. Maybe it's something that others might want to use in the literature in the future to look at, basically look at different ways to capture shareholder dissent and shareholder actions. So, but I will pause with that, and I see we have tons of questions. Okay.
One question is how you measure sentiment for small companies with limited coverage, and so whether my understanding of the question is whether the fact that you are counting so essentially you're counting the number of instances of the number of times that the company comes up in the news. My limit attention to bigger companies. Is that a concern, or do you think?
Yeah, so but I see this question, as you pointed out, from Dr. Riyad. So there's no question that smaller companies will have less coverage, right? Whether it's traditional media or it's social media, and also shareholder actions, right? The shareholder proposals are trying to get attention on certain issues, and they're going to get more attention for larger companies. So there'll be more proposals for larger companies, but we are including all firms. And because we are weighting it by the buzz of the firm, we are capturing. We're not, obviously these are all listed companies, and we are leaving out the companies at the very bottom in terms of who don't have huge coverage. So in that sense, we're not capturing maybe some of the very small companies, but I wouldn't even know what to do about that, because they're just not going to be in the news, right? And so you won't be able to capture sentiment. And Laura and Hoa, please feel free to chime in and comment.
Yeah, I agree. But we dropped the 25% of company with low media coverage. So certainly if we can capture sentiment for these even smaller companies, that would be a good thing to add to literature. But yeah, in this setting, we don't have that. Yeah, we got to cut them.
Thanks. Thank you. So then there are two questions I think are related. Then there will be one. I'd like to ask one question, and but I mean, let me try and ask let me try and relate these two questions that I think are related. So one is sort of raises the possibility. Actually, the last one, I think, the last question that came in raises the possibility that essentially, there is an attempt of lobbying, sort of accepting an influence, right? Especially by institutional investors, sort of by, in a way, influencing sentiment. There is an attempt to influence the behavior of, the choices of managers at the firm. So that's interesting. And then there is, I think, a related question that asks whether the measure of public sentiment, its effect on the proposals, on the number of proposals, or what it means in terms of impact on the management choices, whether that influences investment actions by shareholders, but I guess also by managers.
Yeah, so I think we are trying to answer both questions, right? One is we do find that sentiment impacts the number of shareholder proposals. And then we also find that it has an impact on managers in the sense of CEO turnover, right?
Yes.
In the sense of director turnover. I mean, that's huge impact on the leadership of the company. As shareholders, basically you hold directors responsible. They're supposed to represent you, right? And if public sentiment is against a company, it's directors who are going to leave the firm. So I think shareholders are having big impact if if people are concerned about a lot of issues at a firm, then there are more shareholder proposals, and more shareholder proposals is associated with more director turnover and CEO turnover. So it seems like it's all flowing through and having real consequences.
And how about the room for sort of making lobbying more powerful through this mechanism? Do you see any room for that?
Okay, so I've got to tell you, I think we put up something about the seminar or our paper. I think Hoa put it on LinkedIn or Twitter or somewhere. We put in our paper, and one of these investors who is very active in putting out shareholder proposals was immediately sort of saying, hey, this has huge impact. So folks, watch out that, we are showing that it has real economic impact, that, oh, one more shareholder proposal can cause this to happen. I think
That's what I mean. Could this be used to essentially learn a way to influence the behavior of firms, right? By learning that the number of proposals have an impact, could this be used to
impact firms and to
yes,
impact other investors to put in more shareholder proposals?
I have a related question. May I ask a question?
Of course.
A question on my own related to this. I mean, it's a really nice example of a really rare example in which empirical research on a financial topic makes a contribution potentially of interest to other disciplines in the social sciences. So essentially, you are uncovering the fact that the number of times in which questions are asked, that's a measure of potential dissent, right? I mean, politicians, I think they have an intuitive understanding of this, right? They get worried when people are asking things, right? When people are quiet, politicians know that there is no problem there, right? And in some sense, you're picking this up. That might be of interest to essentially, and you're verifying this with the empirical effect on what happens to CEOs, for example. So you're verifying that the importance of the effect, right? So this has implications in some sense for anthropology, for sociology, right? That we human beings tend to, if we don't say anything, it means we are happy, right?
Yeah, but I agree. I think, geez, we are seeing a lot of things on the political front in the US right now, and this really can be applied. This kind of analysis can be applied to a whole lot of other setups. But as finance academics and the four of us interested in corporate governance issues,
I guess so, yes.
we are applying it to what makes sense for our research. But public sentiment matters in so many different ways for companies, for people. Yeah. And there was some question about, can you use this to lobby or try to change public sentiment? That's what PR firms do all the time for companies, right? When a company gets into trouble, you are trying to get these PR firms to help you maneuver that and turn that around. And the PR firms end up playing a big role with companies trying to figure out how to change the narrative.
So I saw a question about that as well, like exaggerated media coverage, right, from Dr. Ria that could create endogenous issues. But we should note that in our measure of sentiment, we remove any press release or any direct news from the firm, so that does help. And if you look at social media controversies separately, then all the results are still there, and you would think that controversies are less influenced by that as well. So yeah, just make sure it's a related question.
There is one more bit. There is a methodological question, sort of how do you measure informativeness on news social media posts? So whether you take into account sort of the type of keywords that come up, keyword coverage. But although I think you went through, you went in the description of the method, you went through that, right?
So I can try to answer this.
Whom is the question by?
Arika.
Okay, I'm just trying to get to the question here. How do you,
How do you measure informativeness of news, social media posts? Is it about keywords coverage, such as dictionary methods, I guess the type of NLP method that you use, or are you extracting the content informativeness using deep learning? I think you are counting, right? Instances of please, I'll let you explain.
Oh, so we are not extracting anything ourselves. It's this firm that uses machine learning to extract the information, and then we are using that information. We are not doing any. We are not working with the original media conversation or anything. This firm is very sophisticated. And they end up extracting the information and they come up with these scores and we end up using that information.
And my best understanding of their methodology, which is that they use a combination of keywords as well as like a supervised learning. And they have update like quite often as well. So you could imagine that by now they should already incorporate more advanced large language models.
Do you mind me asking you one more question? I know that you have to close at 4 o'clock, right? But just one 4 o'clock European time, Central European time. Very, very quick one if you have time. Whether bots is a predictor of the strength or the effect of sentiment on the number of proposals. I know that you scale by bots, right? But could it be a predictor of the strength or the effect or the reliability, the statistical reliability of the effect? Or is it something that you looked into or you could even look into?
Are you saying buzz? Sorry, Valerio, I missed that. Are you saying?
Whether buzz is a predictor of the strength of the effect. So you measure a strength, right? You measure an effect between between sentiment and the number of proposals, right? And I know you scale by bots.
Yeah. So yeah,
but it could actually predict such a strength, right?
Yeah, we thought standardizing it by buzz is sort of much more equitable than just based on one or the other. We could try that.
I guess my question is, when the bots is stronger, could you? Is it conceivable that the effect will be more statistically more reliable? Maybe. I don't know whether you looked into it, but it's just that would be a curiosity that I would have. If it is to be used, if your estimates are to be used to predict, to predict sort of the effect, for example, on CEO tenure, right? Could we say that when the bot is stronger, then we have a more reliable estimate of the effect?
Yeah, I guess my concern would just be that, okay, buzz is going to be very large for very large companies. Again, the Teslas and the Exxons, and then it's going to be very different for other companies. But maybe we can try that also. Yeah.
Because in some sense, you could actually. What I have in mind is that you could actually predict. You can. So now you have estimated this effect, right?
Yeah.
Now, those wanting to use it don't have to estimate anything anymore. So they have, once we have established this causal nexus, you can say now, managers, CEOs, boards, kind of just look at the number of proposals that are coming in and take that as a signal that maybe they're doing something wrong, that they should be worried that some controversy, some unhappiness is stirring, right? Am I interpreting sort of the usability of your results correctly?
Yeah, I think that's exactly sort of what our point is, that if there are a lot of shareholder proposals at your firm, you as the management or the board better pay attention to that.
Yes.
Not just what percentage of 4 votes the shareholder proposal got, but the number of shareholder proposals is saying shareholders are really concerned about a whole host of issues at your companies, and that's being partly driven by sentiment.
Okay, I am conscious of time. I'm conscious that you have to leave at or around, but not very much later than 4 o'clock Central European time. So if that's if that's okay with you, I would bring the seminar to a close. If that's okay with Professor Aggarwal, Reena, that's okay with you, so that we will be perfectly on time at this point.
Thank you so much, and happy to absolutely look at the other questions and maybe get in touch. And I'm sure your questions will help us improve the paper, and maybe some of the questions we'll clarify in the paper itself in the next draft. So, but thank you to everyone, and Cesario, Valerio, thank you so much. And again, on behalf of FMA, I want to thank you for the series that you're conducting.
Thank you very much. Thanks, Reena. Really wonderful seminar. I think, look, it's really beautiful to see sometimes finance making a contribution that could actually be useful outside to other disciplines. Really, I thought this was fascinating, and also very practical, very practically useful. Many thanks to you. Many thanks to your co-authors, and many thanks for Cesario and Michelle for organizing and for the opportunity to moderate this wonderful seminar.
Yeah, absolutely. A great shout out to my co-authors. Thank you, Lauren.
Thank you very much.
Thank you, everybody.
Thank you very much.
The paper link is in the chat if you haven't found it already. Thank you again on behalf of FMA and FEMRN, and please join us next month with Gordon Phillips. Have a good day.
Thank you very much. Thank you.